Hello everybody and welcome back to Crypto Simplified. Thank you so much for all the subscriptions, the likes, the shares, everything. We have hit 300 subscribers. Thank you all so much. The total cryptocurrency market cap is now underneath 600 billion US dollars. We've had a bit of a slide. It seems like there's another altcoin bleed happening, but the money is not really rushing back into Bitcoin just yet. Bitcoin is currently under $13,000. This isn't something that we thought would happen again, especially considering how close we got to that $20,000 mark. There are a few people on Twitter and on Reddit who seem fairly positive that Bitcoin will go back beyond 20,000 and smash new all-time highs. But there isn't really all that much right now in terms of evidence in the market to suggest that. It seems a bit like hopeful thinking, and also people are over-relying on past patterns. How do the past patterns work? Like so. We had some major news about Bitcoin. It'll be something on an either national or global scale that would affect the visibility and usability of Bitcoin in a positive way more often than not. So the money rushes from the alts into Bitcoin. People sell their positions, they might even sell their alts at a loss, and then they move that money over onto Bitcoin to enjoy those awesome fiat gains. As a result, we will see Bitcoin dominance fly up at the expense of the alts. So anyone who's holding lots of alts will feel a bit of a pinch at that point in time. But then, once Bitcoin sort of starts to stabilize, all that money from Bitcoin rushes into the alts, which are now super low, and then we get new all-time highs on the alts. Also, that's what people think will happen. And that's based purely on what's happened in the past. Is that an accurate way of looking at the market? No, the markets don't really care what happened in the past. You can try to use what happened in the past as a bit of a guideline, but honestly, past performance does not affect future results. Remember that. Repeat that several times, because that's exactly how it happens in this market, or in any market for that matter. So of the 4 projects that are actually in the positive, one is almost unanimously seen as a scam. The other one people don't like too much because they think there is no real value being reflected here. And the other 2, Neo and Gas, they've been flying. They haven't cared what happened in the rest of the market. They've just been pushing on to bigger and better things. Neo, there's another target set at 200 USD for a single unit. A week ago, we'd barely even touched 100. So the Neo community is really setting its sights on some crazy things, and I shall talk more about this later on in the video. One of the early adopters into Bitcoin and someone who does know a thing or two about finance and financial tech is one of the co-founders of PayPal. This is a very insightful article. I will attach it, as I do all my sources, in the description, but I do feel the need to point out a certain few things in this article, not necessarily in the headline where he says he can imagine Bitcoin being a global store of value, but rather in this part, Bitcoin versus blockchain technology. Too many people say, oh, I hate Bitcoin, I love blockchain. You can't really separate the two because Bitcoin gave us the blockchain. The uses of blockchain-based tech are being tested in the market by Bitcoin and by altcoins. A blockchain is not a database. A blockchain is a distributed or decentralized ledger that lots of people can simultaneously verify in order to prevent fraud and the changing of data on this platform. That's exactly that. And the whole point of this is that it needs several parties, not just a closed system of bankers, to actually verify this to make sure that it is true. If there are bad players trying to manipulate the data here, the network will sort them out. That's what a blockchain is all about. A blockchain is not a ledger on the cloud. That's what a lot of people are treating it as. It completely isn't that. And next up, we have a little bit more FUD and uncertainty and all that in the system, but we do see, I admit my hands are up for this, it's from a shitty tabloid. But news is news is news. There's no smoke without fire. Or maybe they're just trying to get the clicks, which I totally wouldn't put past them. But since it's been posted, a few other people have reported on this as well. not the most reliable of sources have reported on this, but the fact that it's been said, that the fact that it's out there, and the fact that people might be quoting this in more mainstream publications means that you should probably know what's going to happen. And basically what they claim is going to happen is that France will regulate cryptocurrencies, ICOs, in a much more stringent way. They want to tax them properly to ensure that the EU can collect a whole bunch of tax revenue and benefit from these massive gains in the cryptocurrency space. Obviously, the European Union is looking fairly intently at China to try and see if there is something that they can learn from their implementation of these new rules, these new policies that are sort of anti-cryptocurrency. They want to see how things work. The whole world is watching everyone else. People are just scared of making that one big mistake that leaves their country just trailing in the dust. India is teetering dangerously close along this path of shooting themselves in the feet when it comes to cryptocurrency and blockchain-based development. But currently they're just on hold. There are rumors about this Reliance coin. Sounds like a terrible idea, but okay, if it's going to bring more legitimacy to the cryptocurrency space, yes, I'll back it. But do we really want the big companies sort of just extending their storefront into the blockchain space? I'm not too big a fan of that because we need to decentralize the power. So, yeah, I'm not too big a fan of that. Just let's leave it at that. And next up, what we have is further decentralization on the Ethereum platform. By decentralization, I mean DA ICOs. And this is an announcement by Vitalik Buterin. And he wants to add a few changes to the way ICOs are conducted on the Ethereum platform. So it starts off exactly like what we know, which is you have a project, you look at the white paper, you research all their teams, and then you can contribute to the project. There will be a smart contract address. You send your Ethereum to the address, and you automatically get rewarded your ICO tokens in your MyEther wallet or whatever wallet you're using for this. So that stays the same. That's what we've already experienced. That's what we know. However, going forward, we will have increased democratic power and voting abilities on these platforms. So while you can still get your tokens, sell them on exchanges, do all that, what we do have now is an additional level of control as early investors to sort of put your foot down and vote on the progress of the team. So if, for example, the team has raised a bit of money, they need a bit more money here and there, or they need to reallocate their funds to a different part of the business. Like, for example, you see those pie charts on the white papers and the token allocation papers that talk to you about where the money you are contributing to this company is going to go. Of course, things don't always work out as planned. You might need to divert funding somewhere else. So by getting the investors in on this, the whole transparency aspect of it is going way up. However, my problem with all this is that these are startups. Startups need to be absolutely agile. They need to think on their feet. They need to make split-second decisions that could make or break the future of this company. By getting a whole bunch of ICO contributors in on the decision-making process does not sound like a way forward. It sounds more like democratic government bureaucracy that just ends up slowing everything down. Everyone seems to be jumping on this cryptocurrency bandwagon, and not that many people are doing their research before getting involved. Do we really want a whole bunch of people who are just in it for the money and nothing else to be making decisions on the future of a company? And yes, while I do enjoy doing the research, looking at the use cases, looking at the teams, looking at how this could potentially make our future better, I do not know nearly enough to make business-related decisions for the day-to-day running of a company, or even the strategic running of this company. Even if I'm a part of the team, just because I'm giving them a bit of money does not mean that I am in this absolute pilot seat. No way. So I have a huge issue with this because while this might increase the transparency of it all, I do think it's really going to slow down and hinder progress of these real fast-moving companies. So I do hope that we find a good compromise, because yes, this is just what's coming from one article. I do hope that we can use our means of voting in a decentralized way to make these things quick, instant, and beneficial to the company. And if this can be used in a way to both benefit the company and give us some measure of insight into how they're using their funding, absolutely fantastic. Got no complaints about that. But currently, the model that I'm seeing right now is scaring me a little bit. You can complain that there are lots of awful projects launched on the Ethereum blockchain. It's something that Neo are trying to avoid by having a very high gas limit in order to deploy the smart contract. This could be seen as a step that might be a bit of a hindrance before it is actually beneficial. Or maybe this could just be a bit of a deterrent to ensure that people become more responsible. This will be very interesting to see how this plays out. So I am very, very interested in this. I have signed up for Google Alert. I will ensure that I know everything as this stuff gets posted on websites all over the internet. So having said that, let's have a look at some of the partnerships that have been forged in this cryptocurrency space over the last few days. One of them is IOTA. And they do have this live data marketplace that they really want to make. It's not launched yet, but they do have some fairly exciting names showing up over here. So the newest addition to their data marketplace is Philips. Everyone knows Philips, huge Dutch company, lots and lots of electronics and lots of potential for integrating the Internet of Things with their product line. It's totally unsurprising to see the number of Nordic companies on this list, but the one company that I really want to point out is this Blue Tea. What is that company? It's called Telstra. For a lot of people outside Australia, you probably wouldn't know what this company is all about. They have their sights set on the long game for the Internet of Things. And if they're part of a combined data marketplace, it could just add much, much more value to this. In being the most popular mobile phone operator in Australia, the amount of data that they can get about daily usage will be unmatched for the region. So if IOTA can manage to get lots of other major players from around the world onto their platform, they could be in a position to provide a lot more value to all their customers. And if we're linking everything with the blockchain, we can keep the privacy intact. And to go back to something I mentioned earlier, I spoke about Neo and Gas both being on the up, both looking very, very positive in the long run. So the rest of the market's down. Neo has just totally ignored what's happening in the rest of the market. Things have kept going. Gas and Neo, if you notice, have the same logo. That's because you need Gas to send Neo contracts. A Neo unit cannot be divided. You have to send an entire Neo. So Gas is that divisible function of the Neo platform. And like I said earlier, you need an absolute ton of gas to issue a smart contract for an ICO on the Neo platform. You would think that with the high cost of launching an ICO on the Neo platform, the companies would probably put a bit more work into making sure that their platform works. However, there are a lot of, not criticisms, but there are red flags being raised by the community. A lot of people don't see the latest project called The Key as something legitimate. It's very similar to Civic in that it's an identity platform using blockchain technology to keep your identity safe but also highly usable on several platforms. The overall sentiment on this seems negative, so I shall watch this space to see how this develops, but it seems like people think that it's a scam. Aphelion was considered a scam. So while there haven't been all that many ICOs on the Neo blockchain, two high-profile ones seem to be considered scams. I don't need to tell you why this is seen as problematic, because this is an awful ratio to have. People talk about shit projects on the Ethereum blockchain all the time, but the ratios for Neo look really worrying. Similarly with Trinity. It seems like they copied a diagram straight from Raiden Network's white paper. While plagiarism is a deplorable act, maybe the concept is best explained like this. Maybe. But they could have tried to be a little less blatant with the way that they displayed all this information. Then again, it could be two companies deploying the same sort of tech. I'm not a programmer, I can't break this down for you, but if there are any other programmers out there who'd like to share some satoshis of information and insight, I'll be glad to send your information across in an updated video, a follow-up video, or even in the comments or description. So just let me know. I'm here open to all your suggestions. Now, this is something for the nerds. I know a lot of you have heard the word ERC20 token. What is an ERC20 token? Well, it's a standard Ethereum token that's being released on their platform. But did you know that there are other things? No, there aren't 19 other tokens that came before ERC20. Not at all. It's just a code that's being used by the programming community. So now we have a new proposed standard called ERC 777. I know there are a lot of you who are not technically inclined, but to break it down in the most simple form, the current parameters that we have for our tokens and the use of these tokens are not absolute. All the things that we want to do with Ethereum and Ethereum-based tokens cannot be done with what we have right now. So with these new types of tokens, what people are trying to do is just see, what if we did this? Would this be possible? We're in a space of massive experimentation right now. These are the sort of questions that the innovators in our community need to keep asking. There's another standard of token called ERC 721. This token is all about being non-fungible. What does that mean? Fungibility is a term that says that all tokens are equal. For example, $1 here is the same as $1 held by somebody else, because a dollar is a dollar is a dollar. Same thing with a lot of our cryptocurrency tokens. But for those of you who saw my video on waves, link over here, I did wax lyrical about Primal Base. Primal Base is tokenizing office and workspaces, and they do have buildings all over the world. However, if you have a building in Manhattan and you're offering a space there, and you're also offering a building, let's say, in Buffalo, same state, same legislation, but the value of the real estate varies significantly. Will you charge the same price for a workspace in Buffalo as you would in New York? Probably not. And that's what the non-fungibility of the tokens enables you to do. Not all tokens are created equal. So this enables you to reflect the valuation of the real estate in a tokenized form while maintaining the same platform. Again, we're in a huge experimentation phase. All this stuff is how we learn. We think of the idea, we implement the idea, we put it out to the market, we let the market forces test it to see if it's something that we can actually use. Of course, we might intend something for the nature of this token, but the market forces decide something else. That's the beauty of an open and permissionless market. So there's a lot of room for development in this space especially, and we're just going to keep getting new iterations of these ideas. They're going to keep getting refined, and we're going to keep making things better, more efficient, and more usable. What we need is adoption and ease of use, because we need people to use cryptocurrency and blockchain-based technology while not knowing that they are using cryptocurrency and blockchain-based technology. That's the goal. That is how we get the whole world onto this. And lastly, I've got to talk about a recommendation for a coin, because yes, while the market is down, I do not think all coins are created equal, and I do think that there is one that is possibly, not an investment advisor, that's possibly at the lows it will be for the foreseeable future. This coin is called Dragon Chain. It's currently trading on KuCoin and a bunch of other ones. I would suggest going on KuCoin because the price is fairly low on there. But this is a fairly promising project. A lot of the people who were rating ICOs gave this like massive amounts of thumbs up, and I tend to agree with that because of the use case, specifically the use case. Okay, so what they're doing is creating a startup incubator. What they're also doing is putting in a marketplace for skills and for hiring of talent based in this blockchain space. And the last part is a security protocol. This is a very promising trifecta. So I do quite like that. The price is very low. They promise scalability. They're preaching scalability. Thing is, we will not know how scalable this truly is until the end of 2018. So what I'm going to do is invest some money that I'm willing to lose. Put it in there. For me, this is a punt. However, I think this is a punt that can stand me in some very good stead because of the positioning of this company. What they want to be is a plug-and-play blockchain solution for enterprise. You don't need to bring a whole bunch of consultants and nerds in to change your entire business platform. You just contact these people and it'll be quick and easy, and they are promising ease of use. Do I need to say any more? Ease of use on this platform to move your business from the current models that we have right now to the blockchain-based models of the future. What do you think of that, folks? So that's it from me. This is Marv from Crypto Simplified signing off. I do hope you had a fantastic weekend. Hope you have a fantastic week ahead. Don't let this bear market pull you down. We will overcome all these hurdles and we will come back stronger, bigger, and better than ever. Laters.
Crazy fatal attraction got me down with like a drug in my vein. I just can't stop. Crazy fatal attraction got me down with like a drug in my vein. I just can't stop.